Welcome back to the deep dive. You look around the tech landscape right now, and everyone is obsessed with the AI revolution.
Hmm.
It's all chips, it's software, chatbots that can write a perfect sonnet in 3 seconds flat.
Right. But while everyone's staring at the screen, there's this massive, almost silent crisis brewing behind the scenes.
The physical world crisis.
It's the physical world colliding with the digital one.
Yeah.
Because, none of that AI magic actually happens without electricity.
And we're not talking a little bit of extra power.
Oh, no, we're talking staggering, just civilization-shifting amounts of it.
Exactly. And that is why today we're looking at a company that is positioning itself not just as a utility, but really as the engine room for this entire digital economy.
We're talking about NextEra Energy, or NEE.
That's right. We're doing a deep dive into NEE, and we're working off their Q4 2025 earnings report and call, which just dropped on January 27, 2026.
And what really stands out, right away in these documents is how NextEra is trying to reframe the entire conversation.
How so?
They aren't just selling power anymore.
Yeah.
They're pitching themselves as the builder that big tech desperately needs to keep the lights on.
Their CEO, John Ketchum, he practically stamped that on the company's forehead. He said, quote, "America needs a proven energy infrastructure builder. That's who we are."
Mm.
So our mission today is really to unpack that statement. How does a traditional energy giant pivot to become the backbone of the AI boom?
And what on earth is bring your own generation?
We'll get to that. But look, before we get to the future tech stuff, we have to look at the foundation.
The numbers.
The numbers.
Yeah.
Because they tell a pretty compelling story about stability in what's a really chaotic market.
They really do.
Okay, so let's hit the headlines first. For 2025, they reported adjusted earnings per share, that's EPS, of $3.71.
Right, which is up about 8% from the year before.
And for Q4 specifically, they beat expectations by a penny.
Which, in the utility world, that's a solid win.
Yeah.
But if we connect this to the bigger picture, it's not just about one quarter. It's the trajectory.
The long view.
The long view. They're projecting that same 8% annual growth rate all the way through 2035.
Okay, I have to play devil's advocate for a second here.
Go for it.
In the tech world, if a company grows at 8%, investors panic. They want, 50% growth. Why should anyone care about a utility growing at 8%?
Because utilities are supposed to be boring. They're supposed to be slow, safe, predictable.
Right.
So predicting 8% growth for a full decade implies they have visibility on this massive demand that just isn't going away. It signals a pipeline of projects that stretches out for years.
So in this sector, 8% compounded over a decade is a monster.
It's a monster. It's the difference between a sprinter and a marathon runner who just never slows down.
And that gets back to that builder identity you mentioned.
Precisely. They aren't just flipping switches. They are actively constructing the grid of the future across the entire value chain: generation, storage, transmission, gas, everything.
And all that construction, it's being driven by one thing specifically.
Data centers.
Data centers. This is where the report gets really, really interesting. They have this new internal goal they're calling 15 by 35.
Right. This is their major origination channel.
Hang on, origination channel? That sounds like pure corporate speak. What does that actually mean in plain English?
Yeah. Origination is just where their new business deals are coming from. So their goal is to originate or, sign deals for 15 gigawatts of new generation.
Specifically for data center hubs.
Specifically for them by the year 2035.
15 gigawatts. Numbers like that get thrown around a lot, but let's put that in context. A single gigawatt can power roughly 750,000 homes.
Mm-hmm.
So 15 gigawatts is enough power for over 11 million homes. They want to build an energy grid the size of a medium-sized country just for computer servers.
And Ketchum was pretty blunt on the call. He said he would be disappointed if they don't double that goal. He wants 30 gigawatts by 2035.
That's incredibly ambitious. But here's the thing I struggle with. We know tech companies like Google and Amazon, they're impatient. They operate on software timelines.
Right. They want power yesterday.
Exactly. And building power plants takes years. How does NextEra bridge that gap?
That's where the strategy gets really clever. They have this concept of the hook.
The hook.
See, building a gas plant or, say, a nuclear reactor takes years, sometimes decades. But the hyperscalers, the big tech companies, they need to start running servers now.
To train their models.
So NextEra uses renewables and battery storage as the hook.
Ah, because they can build a solar farm or battery park much faster.
Exactly. It's a speed-to-market solution. They say, look, we can get you up and running with solar and storage right now. And that gets the data center operational.
So it's kind of like moving into a house before all the renovations are done.
That's a great analogy.
You're camping out in the living room with the solar panels while they build the master suite, the gas or nuclear plant out back.
That's perfect. And once they're in the door, they expand that relationship with firm capacity, the stuff that runs
Yeah.
24/7 later on.
And they're already moving on this.
Oh, yeah. They're currently discussing 20 of these potential data center hubs with the market, and they expect that to jump to 40 hubs by the end of 2026.
So they're building entire energy ecosystems around these things. But this raises a huge question, and I know this is something regular people worry about.
Mm.
If big tech is sucking up all this power, who pays for the infrastructure? Does my grandma's electric bill go up because ChatGPT needs to learn French?
That is the multi-billion-dollar question. And it brings us to that acronym you mentioned in the intro, BYOG.
Bring your own generation. It sounds like a potluck dinner.
It essentially is, but for power plants.
Hmm.
The concept is that regular ratepayers, your grandmother, should not be subsidizing the massive energy consumption of a trillion-dollar tech company.
So the strategy is shifting.
The strategy is shifting towards hyperscalers paying for their own infrastructure. So if Microsoft or Google wants a massive data center, they have to pay to build the power plant that runs it.
Okay, and this is where NextEra thinks they have a massive advantage.
A huge one.
Yeah.
Because if you're a tech CEO, do you really want to be in the business of building power plants?
No way.
You need land, transmission lines, permits in all 50 states.
Yeah.
NextEra is basically saying, we have the balance sheet, we have the land, we have the expertise. Let us build it for you on your dime.
Okay, but I have to push back on this next year is indispensable idea for a second.
Sure.
I was reading the Q&A section of the call, and someone brought up a really specific threat. Google recently bought a developer called Intersect.
Right.
Doesn't that suggest big tech does want to build it themselves? I mean, if Google is buying their own developer, doesn't that cut NextEra out of the deal?
It's a valid concern, but the CEO, John Ketchum, he practically brushed it off. And his rebuttal was fascinating because it really highlights the difference between having money and having capability.
How so? Google has infinite money. Can't they just brute force their way through any problem?
In the digital world, yes. In the physical world, not so much. Ketchum pointed out that buying a developer is the easy part. The hard part is the supply chain and the tax credits. He specifically mentioned that smaller developers like Intersect don't have what's called safe harbor tax positions.
Okay, pause. Safe harbor. That sounds like maritime law. What does that mean in a tax context?
It's a crucial IRS rule. It basically allows NextEra to lock in higher tax credit rates for projects because they started spending money on them years ago.
So it's like a grandfather clause for tax breaks.
Exactly. Newcomers like Intersect miss those deadlines, so their projects are automatically more expensive right out of the gate.
So NextEra is sitting on a pile of coupons that nobody else has.
Right. But the bigger issue, honestly, is physical inventory. Ketchum mentioned they have solar panels and storage equipment contracts secured all the way through 2029.
And it's not just the panels.
It's the boring stuff. It's the transformers, the high-voltage breakers.
And is that really a bottleneck?
It is the biggest bottleneck in the world right now. The wait time for a large power transformer can be 3 to 4 years. And NextEra, because of their size, they're at the front of that line. They have the inventory. So even if Google wants to build their own solar farm, they might be waiting until 2030 for the parts.
Whereas NextEra can deploy them next year.
Next year. So you can buy the chef, which Google did by buying Intersect, but if there's no food in the kitchen, you still can't eat.
That is a bold stance. We're too big and too complicated to be replaced.
It is. Ketchum's view is that the complexity of the grid and the supply chain creates a moat that even Google can't easily cross just by writing a check.
Let's pivot to the energy source itself. We talked renewables, but the report had a surprising twist on nuclear energy.
It really did.
But nuclear was dead in the water, but this report paints a totally different picture.
We are seeing a nuclear renaissance. I mean, the big headline here is the Glenn Arnold nuclear plant in Iowa. They're bringing it back
And
online.
this was a plant that was fully shut down, right?
Correct. Is it being decommissioned? And now it's being recommissioned via a 25-year power purchase agreement, a PPA with Google.
A perfect example of that BYOG model.
Absolutely. Google needs carbon-free power that runs 24/7. Wind and solar can't do that alone, so they are literally paying to resurrect a zombie nuclear plant.
Is this just a one-off in Iowa, or are they seeing this elsewhere?
It is definitely a trend. They mentioned their Point Beach plant in Wisconsin. It recently got a license renewal to operate for another 20 years.
And they already signed a deal there.
Yep. Just signed a deal for 14% of that plant's capacity, which added 3 cents to their EPS.
So existing nuclear plants are suddenly gold mines because you can plug a data center right next to them.
Exactly. They call it co-location. You put the data center right next to the nuclear plant, you avoid transmission fees, and you get steady, reliable power. They're looking at Seabrook in New Hampshire for the same thing.
What about the futuristic stuff? SMRs, small, modular reactors. I feel like I read about these every week. Is NextEra betting the farm on mini nukes?
They're definitely looking at it. They have a dedicated SMR team. They're analyzing 6 gigawatts of opportunity for co-location. But, and this is a big...
There's always a but.
There's always a but. The analyst in me really appreciates their caution here. They made it very clear that their base financial plan does not rely on SMRs.
What does that mean for an investor?
It means they're telling Wall Street, do not price this into the stock yet. If SMRs happen, it's a bonus. It's pure upside. But if the tech fails or takes 10 years, our 8% growth projection is still safe.
That's prudent. We'll build it, but only if you sign the check first.
Right. They said they'll only move forward if there's proper risk sharing. They want the tech companies and the government to share that burden. They aren't going to be the guinea pigs.
Okay, we've talked national strategy, data centers, nuclear. We have to zoom in on their home turf,
No.
Florida.
Florida Power and Light, or FPL. It's the crown jewel of their regulated business. And the scale here is just mind-boggling. They mentioned that Florida is now a $1.8 trillion economy.
Right, $1.8 trillion?
Yes. To put that in perspective, if Florida were a country, it would be the 15th largest economy in the world, bigger than Mexico or Indonesia.
That is wild. And FPL is the one keeping it all running.
And running it incredibly efficiently. They highlighted that their operations costs are 71% lower than the industry average. And customer bills are 30% lower than the national average.
Which is important because, again, it goes back to that affordability question. If you have all these data centers flooding into Florida, how is FPL protecting the locals? Let's dig into this large load tariff they mentioned. How does that work?
So it's a mechanism to prevent cost shifting. Usually when a utility builds a new substation, that cost gets spread across the entire rate base.
So we all chip in a few cents.
Exactly. But the large load tariff changes that for hyperscalers. It says, we'll give you speed to market, we'll build what you need fast, but we're going to ring fence those costs. You, the tech company, pay a specific rate that covers the new infrastructure you require.
It protects the Florida grandmothers.
It protects the Florida grandmothers from footing the bill for the new substations that big tech needs. And the tech companies are biting.
They are.
They have 20 gigawatts of interest from hyperscalers in Florida alone. 9 gigawatts are in advanced discussions. They expect to start announcing deals in 2026.
Wow, it seems like they've turned a potential conflict into a profitable business model.
That's the goal. And they're planning to invest between $90 and $100 billion through 2032 just in Florida.
Staggering. But they're also investing in the technology to run all this. We talked about AI consuming power, but NextEra is also using AI to manage power, right?
Yes, this is Project Rewire.
Sounds like a sci-fi movie. What is it?
It's an internal partnership with Google Cloud. They aren't just selling power to Google. They're using Google's AI tools to inspect the grid, manage field ops, and predict outages.
So they're eating their own dog food, so to speak.
In a way. And this feeds back into their renewable backlog. They added 13.5 gigawatts to their backlog in 2025, a record.
And a detail that stood out here.
Battery storage is nearly 1/3 of that entire backlog.
1/3, that's huge. It used to be all wind and solar.
It shows the maturity of the grid. Solar is great, but it goes away at night. As more renewables come online, the value of dispatchable power you can turn on when you need it goes way up.
Storage makes renewables reliable.
It does. And NextEra has a pipeline of 95 gigawatts if you count co-locating batteries at all their existing wind and solar sites.
95 gigawatts, it's immense.
And it goes back to that builder advantage. They already own the land. They already have the transmission connection. Dropping a battery pack there is so much easier for them than for a new competitor.
It really feels like they're playing Tetris while everyone else is playing checkers.
That's a great analogy.
They have the pieces, the land, the nuclear licenses, the supply chain contracts, and they're just slotting them in where the demand appears.
I can pivot. If the market wants solar, they have it. If it needs 247 nuclear, they have it. If it needs gas peaking plants, they have those turbines secured too.
So as we wrap up this deep dive, let's look at the meta-narrative. We started by saying they're the builder. But after looking at all this, the way they're locking down the supply chain, they feel more like I don't know, the gatekeeper.
I would describe them as the arms dealer for the AI war.
That is a vivid image.
But think about it. Microsoft, Google, Amazon, Meta, they're all fighting for dominance in AI. That fight requires ammunition.
And the ammunition is electrons.
And NextEra is the one sitting there with the stockpile saying, I can sell to all of you.
Uh-huh.
And they have the hook. They can get you started now and promise the heavy artillery later.
It's a powerful position to be in. But it leaves me with one final, slightly provocative thought to chew on.
What's that?
We are moving toward a world where the biggest companies on Earth are essentially building their own private power grids with this bring your own generation model.
A bifurcated grid, yeah.
So if data centers eventually consume a massive chunk of U.S. baseload power and they're paying for their own dedicated infrastructure, does the electric grid stop being a public utility and start becoming a private luxury?
The premium grid for the AI servers that never goes down, and then the public grid for everyone else.
And with NextEra holding the keys to the hook, you have to wonder who actually holds the power in that relationship. The tech CEO writing the check, or the utility builder who actually knows how to keep the lights on.
That is the question that will define the next decade of energy.
Well, on that note, we will leave you to think about that next time you ask a chatbot a question. Thanks for listening to The Deep Dive. We'll catch you on the next one.